Okay, hi there, guys. Excuse me. Hope we're all doing well. Hope you had a good day off yesterday. Now, just let me hear. Someone just tell me you can hear me loud and clear. Let me know, and then we'll get right into it. Yep. Okay, beautiful. Thanks, Helen. All right, there's a fair bit of a lag there, so also just let me know if the stream starts buffering a bit and drops out. It all looks good at the moment, but I don't like it when my streaming program says it's a video output low. That's what it says in YouTube, so whether they're having a few issues or we are, who knows yet. All right, welcome, guys. This is Trade Setup. It's the 26th of April, so we're getting on in the month, close to the end of the month, and the market's still bouncing around a bit. For anyone that's new, just remember you can link into us on Twitter in the top left, Facebook the top right-hand corner of the screen, and subscribe to us at I was going to say at Trade Setup at YouTube in the bottom right. And just remember, we don't give any personal advice, just general advice only of what we're viewing. So welcome to anyone that is new. Just remember you can ask questions on the chat. And also I know a few people have had a couple of issues of just getting onto the chat function while we're streaming. I think you've just got to have an account, a Google account. You've got to be logged into your Google account to see the stream, to see the chat function come up. Otherwise you can just view it. If you can't do that, you can always send through an email with a question if you like to support at tradesetup.com.au. Yeah, that coming through a bit slow. Anyway, we're up and running. Let's get stuck into it then. I'll get rid of that. I'll get up the program. Something else I've got to do, doesn't I? There we go. So you should see the full screen there. Right, so the US, I think we obviously had a day lag yesterday, a day off, so the markets didn't react to the down move. Was it Tuesday night? So the US dropped on Tuesday night, but then they bounced back slightly. It was a bit of a mixed night on Tuesday. I think we had a couple of markets up. I think the Nasdaq was down, if I remember, and then obviously last night it was a bit of mix, slightly up as well. Not a big night. So all in all, we're only really expected to open down about 5 to 10 points or 10 points or so today, which I think we opened up. I'm not exactly sure. I'll just find out. Look, we opened up slightly down, 59.21. Oh, sorry, slightly higher. So give or take, break even. So not much reaction. So it's good to come back and not see the market react overly, on the upside or downside either. So not a bad thing. I think the markets in the US, they're coming up in a few headwinds. It doesn't potentially affect our market as such, but it's going to affect the US dollar, which in turn is going to affect commodities. Obviously going to affect Australia. But there's going to be a few stocks that won't obviously react. I just feel that the bonds are going to create a bit of a headwind. Bond yields, I mean, we've spoken about them a bit recently. Just saying that they sort of went a bit quiet when you've got, Trump, the Twitter maniac. He's causing all sorts of problems when he jumps on Twitter. So he's always picking a fight, basically, in my view, picking a fight with somebody or bargaining with somebody. And that's the way he does things, but what it does is create a bit of uncertainty in the market. So I think it took a lot of the attention away from bond yields, which originally why we got this sell-off. And I think they're coming back now because just above 3% on the yields, it's about where we are at 3.01, 3.02. It's sort of that key level. Actually, we'll get it up. I'll get up the charts. And it's right there now. So higher rates just means, just get the chart up, 10x. There we go. So that's bonds there. I'm going to have to get up a daily, I think it was, or the weekly. Okay, so you can see that resistance zone through there. Last time it was back, it was here around 2014. We backed off yields, formed a bit of a base through, which I'll draw that up. Support, found support, double bottom right down around 1.4%. So that's when the bonds were high and the yields were low. Now it's starting to reverse. We're starting to get the yields creeping up as the US is looking at raising rates. So they're factoring in. There's still that bit of a uncertainty whether they're looking at 3 this year or 4 rate rises. I think some of the data can be mixed. It's been okay, but it's not getting out of hand in the way of inflation, which you probably think um, we're going to be looking at 3 rate rises. But I think even looking further ahead down to 2019, it may still be an extra one of what they thought. I think they were dropping the bond prices themselves, so they're starting to fall over. And I think the flow-on effect is obviously when you're looking at shares, they've had a bloody good run, and we're starting to see a bit of heat coming out of the market. Now we're always trying to guess how much heat's going to come out of that market in the US. Have we seen the lows, or are we going to see further lows down the track? Um, don't forget too, when you've got yields that start heading higher, physical bonds become a bit more attractive for big fund managers or money managers over in the US. So if they're not going to see potential on the horizon for stocks getting better returns on stocks, they might just start to edge some cash out of share positions, out of stocks, over to try and chase the yield on the bonds. Now it's looking more and more attractive as the bond yields go up. So that you might see that it's going to constrain the market, and I think there has been quite a few. If you look at the earnings in the US too, um, a lot of the earnings, yeah, they've done okay. Some haven't hit consensus. Some have done a bit better. It's been a bit of a mixed bag, but I think what they're looking at now, they're probably peaking. A lot of people talk about the earnings peaking, especially after those tax cuts, getting a bit of a boost from tax cuts. And I think there's concern that they're not flowed into growth. The tax cuts haven't, or the proceeds of that are not flowing into growth. They're more just not cooking the books as such, but being from an accounting basis. And Helen, you probably know more than me. Just adding to the returns as actually rather than putting into potential for growth down the track. So if they're not going to chuck it into growth areas, try to gain growth down the track, that's why they're sort of looking at it as potentially the company report, or the company, what do you call them, earnings have peaked. So if it's peaked, we might be seeing, okay, where is, everyone's chasing yield all the time. Where your money manager going to chase the yield? Probably potentially just go straight across the bonds. So that's a bit of a concern, I think, longer term. And if you see the bond market start kicking higher and it gets a bit of a run on and it gets through this level where we are pretty much right now at 302, that's going to concern the overall market. So you might find there's a bit of a sell-off. US dollar rallies, which is going to affect commodities too, because I think the US dollar has been held down purely because bonds have been, held below that 3% mark. And I think that's a key level for them. So we'll see. And it hasn't, I mean, technically, you look at that, we had this big bounce off that support zone, bit of contraction, and then we've had that secondary move up. And if we measure that, I'll just get it. This move up here, if we're looking at that as being, the extension, we could easily extend and get up to 331 if we just took it purely a volatility projection. So that's your initial leg up, we've contracted, and your secondary leg up should, you would expect take us straight through that 302 up to 332. And that's going to cause a few issues, I'd expect, on the shares. Now let's look at that now. I'll get my charts up properly. All right, so that's, I mean, if that's the case, then that lower high is going to hold. This is the S&P, and we're going to break down and through that 25.50 support zone, and you just get continuation of lows. And it was overcooked when it got up to 27.25. I think we spoke a bit before about that. Got a bit extended up there, but that still is a higher low. So last time it was extended on the buy side when there's that buying pressure, it was a bit higher at 28. So what we're looking at there, and then the selling pressure that took us from overbought to oversold, got all the way back down again. Okay, so then you flip it over, the buying pressure pushing up. The buying pressure, it looks like the way I read it all the time with the stochastics, it's running out of steam, and you couldn't get anywhere near the 28, and that which would be a positive market. Instead, it's building that lower high. I think it's the same across with the Dow, same sort of move, although that's just broken out. It's just we have to see whether we can hold right here, I think, is the key. If we can't, and we start getting a little inside lower high, we might bounce a bit, get an inside lower high. I think that's going to take us through that support zone. It's still early days just yet, and we have to see what bonds do, whether that does cause, further sell-off in equities. We'll just have to wait and see. I mean, there's still a long way to go, but we personally, I would like to see for the Dow, for instance, probably the S&P, the same. I'd like to see it hold up where it is and reject these lower levels. Reject a move down to 2600 on the S&P. On the Dow, sort of reject that. Hold around that 23,750 to 24. Now it's a big range there, but we are looking at some bigger moves. So we want to see that higher low hold, and then that further contraction, like we mentioned before. I think we might have mentioned that the other day on Monday. But yeah, I think we're at that key point at the moment. Obviously, the markets are reacting when the bonds start ticking up. They're running into a bit of steam, and I think it's only the fact that we had some decent reporting last night, decent earnings, where a few beat expectations, which probably offset the negativity surrounding the bonds. It's still at that key level. So if we break up and through that 3.02% level on bonds, it'd be interesting to see how stocks fare, or whether we do get that sell-off, and whether that does take us. We start getting that capitulation through. What was it on the Dow around that 23,300? So it is 700 points from here, but we've seen those big moves on the Dow before, so we just have to keep an eye on that. When you look at the FTSE, it's in overbought. It's extended where we are, no doubt about that. It's just whether or not we pull back. I would expect a pullback on this market. It's whether or not we pull back and build a higher low. So it's all about a bit of heat coming out, and whether we start building. The charts start building the technical basis to move higher, or we just capitulate. I mean, this could easily turn into a lower high, and if you extend that from high to low, extend it from here, that could take us somewhere around 66 on the FTSE, which is another 800 points from where we are now, give or take. So that could easily hold a lower high here, and you get that the weekly move lower, really cleaning out a few of these buys in here, extend lower. A few people that probably held it through this move and are still holding positions through, this sort of congestion in here, holding long positions. They might be thinking, okay, we're coming back. And if we start rolling over from here, they might start to exit. So you get this big secondary move lower on the FTSE. So they all look. I'm not saying either way. I don't want to say I'm a bull or a bear just at the moment, but nothing's showing me either way. But I'm just trying to look at both sides of the markets. What could happen? What could be the trigger to move us lower? We know what that is. Potentially the bonds, or another tweet from Trump. He seems to be, going from country to country, picking a fight. So we'll just have to see what happens there. It could be that more uncertainty. Couple that with bonds moving up. People are just getting sick of holding longs, especially if they're getting in the market on the bounce in the US, looking for that to be the low, and it starts to prove there's more pressure on the downside, then it could capitulate. We just have to see if buying starts to step in at higher levels or not. The DAX, again, we're overbought, so we're extended, and we only got through that 12,600, that previous high. There is a bit of resistance zone up here. You can see the MAs are contracted in. It doesn't mean it can't roll over from here. We could just push down, build a higher low, and this could continue its merry way above 12,000. If you pull back to say 12,250, for example, yeah, about a couple of 100 points from where we are at the moment. If you can build that higher low, if not, and then you want to see on the daily chart. If you look on the weekly, that pullback, you want to see the daily a couple of good green candles and start to attack that 12,600 again. Otherwise, this could easily just roll over, pierce through that support zone, and then on we go. Again, it's all dependent on, I guess, what the US does, or we could just leave them, leave them to their own devices, I guess. But again, obviously, when the US dollar starts moving, if it's going up, the euro's easing off. That actually is not too bad for exporters in Europe, but then it's not so good for commodity companies over there. If you do get a bit of a rally in the US dollar, I think it's just obviously commodities are priced in US dollars, so a rally in US dollars is going to weaken the commodities, but it's also weakening the euro. So we'll just have to see how that plays out over there. But they're tentative about bonds rising over there as well. So we'll just have to see. But XJO, again, that same sort of situation, getting a bit overcooked up here, and it's a good zone to be a lower high. Still looking for that weekly trend to hold. hold this move up, see if we can build that higher low. Otherwise, because we've had a good move down, corrected back up, another good move down. So we've sort of had two moves down that's going to wash out a lot of traders in this last leg up. But we've got a lot of, I think it's going to take us some time. If the US does sell off, I'd expect to get sold off too, but we might pull up short of taking out those lows, whereas the US could easily take out the lows. A lot more heat has to come out of the US market than over here. What's everyone else's thoughts there? Bulls, bears, or sitting on the fence? Chuck it into the chat there. We'll see who I have to kick out if they disagree. All right, that's it. You're a small bear. A small bear, however. I like that. Not the grizzly, not a raging bear. Yeah, I'm sort of. I would like to see our market hold up. Yeah, no, I agree with Paul. So it'd be interesting. I'd like to see our market hold up. I think we're going to react obviously if the US starts get its pants pulled down. I think we're going to continue. We're going to head down. It's just whether we can pull up short and hold that weekly trend up, or we pierce through and we start breaking, the weekly uptrend. I'll draw that up anyway. That's the XJO. I think that's the weekly trend. That's whether we hold that. That's the trend. I've got an eye on now. We could easily come back and sort of test. We can test quite low and then start bouncing it and consolidate, but still hold that weekly trend because we haven't broken through any serious support level. And the daily could just be suckering in shorts and squeeze them back out. There's no reason why we can't do that. So I think the US could drag some heat out of the market on a bigger correction, whereas we can just squeeze in and sort of oscillate between, I don't know, 57, 50 and 59, say, and then just start to pop up if the US gets a good correction. But I mean, who knows just at the moment. My bet's that we're going to have some sort of correction soon. It's just how much. I mean, it could be overcooked. The bonds pushing up could just be a bit of a storm in a teacup. We don't know. CCL. We'll take a look at that in a minute. I'll tell you what, I have missed a few because I didn't want to load up too much on the upside, just because of the markets. It's more, it's whipping around when they do start to get a bit of a run on. It turns around and retraces on itself, and you get caught when markets look great. They push up, you're up, and then it turns around and retraces on your stops, you're out. So I don't want to be too heavily loaded until this market, the overall market's showing better signs. And for me, it's far from that at the moment. I think it's still got a bit of work to do. Even if it holds up here, it's still going to have a lot of work to do before it does hold up and start to show some really positivity. And then I'd be happy to load up on the on some stocks. Okay, should we let CCO gap down as well? Thanks for adjusting the nose. Yeah, mid to large cap. Look, if I could get the returns on those two, I'd probably focus a lot more on them. It's just up 14% today. Yeah, that was a takeover, and who's to know that's going to happen? Would have been nice to jump in there. All right, what else we got? All right, let's just see what we've got. So at the moment we've just put on. I've only got the two alerts running for positions. I won't go over that because it's paid content, obviously. But we've got one short potentially it could roll over from here. It's just since we put it on, it's been down for the day, but it's just popped up a little bit. But the structure actually doesn't look too good at all. It looks weak. It's holding lower highs. Yeah, good work, Paul. Good work on HSO. So yeah, I think that short. I wouldn't mind having a short on if the market's still going to be choppy. We've only got a couple of longs at the moment, which are going right. One's BPT, obviously. That's up. That's kicking along nicely. We'll go over oil in a second. That's looking like it could keep kicking on. I think it's going to get extended. People are going to view it as extended sooner or later. It's just whether, I don't want to get caught if it does get a bit extended and retrace and you get this big retracement, we get washed out. We've given up quite a bit. At the same token, I want an opportunity to tighten up the risk on BPT, and it may mean just raising it to 144.45. It's not a serious level. That's the only problem. It could easily just sort of have a bit of a grind lower, um, and then kick up into new highs, but it doesn't technically do that. You can see these moves up here are quite strong. It doesn't really pull back. It sort of goes sideways. So if we can get that price action and then it kick on through to new highs, then we can really tighten up that stop and really sort of give it room to move on the upside, and also tightening up and not giving up too much if it does pull back. So that looks okay. SM1 has, so that's pulled back. That's getting extended. Obviously, it's on the weekly, it's getting overextended. The daily's rolling over. If we can't pop up from here, we've got our stop right down. I'm giving this a bit more leeway, purely because I think this could easily have another good run on. But again, we just have to wait and see. You can see the uptrend if you just put a line across the bottom there from low around just below 6 here and just extend it out. It's coming into that zone now, and if we don't get some sort of bounce reaction higher, we'll have to look at an opportunity just to tighten the stop up on that as well. So that's all we got. Anyway, just put in some stocks if you want to take a look at it. I just want to kick over to what we're going to look at, crude. We'll just get crude chart up, see if what that's looking like at the moment. We spoke about this in the past. You can see it's well and truly through that resistance zone at 61.30. So it's kicked on all right. There's nothing really in the way just at the moment. You might find that I'm not a big fan of these sorts of resistance zones, purely because I think support and resistance should be based around people getting stopped in or out of the market. I don't particularly think they're going to get stopped in the market just up here, because you can see at that level previously, the market's moved up. It's found buying support, and the market's moved up. So you know that there's going to be some serious stops below that swing level. Now they've been cleared out, so there's not really any stops up there to trigger. It could just move in there, sort of just that. It's one of those technical things. It's more of a random resistance zone than anything else. But it could pull up short there. I mean, again, this is sort of bucking the trend. Again, it's the Twitter fiend, old Trump, talking potentially about pulling out of the Iran deal, the nuclear deal, and potentially putting more sanctions on Iran, which is Iran, putting more sanctions, which is obviously going to crimp supply of oil and would mean higher prices. Now, if the US dollar, if you get that theme continuing and the US dollar takes a bit of a nosedive again, you might see this accelerate to upsides. And you probably, like I said, maybe if we look at crude. So there could be, we've coming off a good base through here, and that's just extended off here. It hasn't had a deeper correction. I would like to see that higher low build, so it could have another good correction before it starts edging higher. But then we just have to see how it goes. It's also about that supply demand of buyers and sellers. If you've got everyone's sort of position long, you've got to remember how much more fuel is on the sidelines ready to come into the market to push it higher. And if the market sort of senses that it's struggling, you're going to get profit taking come in, and that could just trickle. The market could obviously roll over from just purely profit taking, and then you might find, okay, once a lot of people put on the sidelines, some heat's come out of the market, then they start building that higher low and start building for a continued move up. The others, STO, but look at that, it's gapped up and it's just grinding up. The workers of the weekly look like, I'll go over here actually. Yeah, that's looking good. You can see it. This is Santos, a double bottom through here, major base through around that 3 buff mark. It's edged higher. It's starting to get to that point where it might be getting a bit stretched. You might have that bit of a pullback, build a high low, and then go again. Woodside's coming off support through 28.50, say. 28.50 is working its way higher. This was more controlled, and you get a decent pullback. Found some buyers around 28 before it headed high and took out the high, but then it just pretty much fell over from there. Buyers stepped back in at just above 28 and have defended that level, but whether we start to range a bit, this looks more rangy price action than anything else. But either way, it could just grind high. It needs to you'd want to find an inside high low here, like a minor pullback from, say, current levels, pullback, build an inside high low above 30, 30.50, say. and then to kick on from there. And I think that would be a nice little entry, where you can put your risk and see if it can take out those highs around 34.50, especially if crude continues on. What are some others? I had a bit of a, let me just try to find them. No, I've lost me. Oh, well. So, yeah, is there anything else you want to look at, guys? Chuck in some, I know we've been talking about the banks in the stream, haven't we? Let's get on to what you're just talking about, Pete, Paul. So you got into that. I know that was your weekly. I think, Paul, did you just get into that? This is Coke. Did you get into that recently, or was that back here or in here? What price did you get into that one there? NWL. All right. So that daily, I think we've Paul and I were having a chat about this. The daily, I like that. It actually looks good. That's nice price action there. Just flicking it over to the weekly, it's still. I know a lot of people would argue things change, the fundamentals could change. Fair enough, but technical trades always looking at those sort of zones where you could find selling, especially if you're up. Um, that was a nice little buy on the daily, but your risk would be on a move up towards that 1050 zone. I mean, there's a lot of room to move on the upside. 865. Let's just take a look at that. So it was just on that dip below here. So you're basically pulling back to support. Oh, that's played out all right. That's looking good. I'm guessing you're just going to follow your risk up below the higher lows, or do you have wider risk on those? Oh, Coke at 65, 19th of Feb. Okay. So you bought on this candle here. So that was with that little break. That was off your high low. Look, that looked nice. That was an inside level too. Ideally, it would have been beautiful to buy the day before on a break above this candle here. Break above 846. That would have been nice because you can see the market's washed out this low, taken out this lower high with this move up here, had a good pullback, consolidated, built the inside high low here, and then up she goes. It's just the weekly trend is still definitely on the way down. It's just it seems to be running out of steam on the downside. So we could have a good move on the cards, or we could have a bit of a pullback on the weekly, but it's gonna play out quite nicely on the daily anyway. Yeah, I think with this one, Paul, you've got it nailed on the daily. The only reason I'd show the weekly is purely just to see if there's some zones it could come into. I mean, until that trend changes, you don't want to just chuck a limit order in there. I mean, I wouldn't. If I bought it where you did, you bought it on a nice high low, the market was moving up. I know you probably. Let's just have a look. I'll draw this up here. So you've got a resistance zone essentially through 11 bucks. There's not too many. I mean, you've got this. The good thing about this move, it's moved down quite hard. You've got a good retracement. It wasn't. It's probably, I don't know where it was, 50%. Let's just go back. Okay, so that's the move from 15 bucks before you got your first bounce back up to 11. All right. Let's get back over here. That's the new weekly. So it wasn't a big retracement, but then once it moved down again, it hasn't really taken out this lows by a significant amount, which is sort of the early warning sign that maybe this selling is starting to run out. People who wanted to sell have already sold. And you get this sort of washout here. You get this double bottom. The market's had to retrace. It's come all the way back to that anchor level, really just about 11 bucks. So if it was a weak market, you'd feel that it would pull up short. It would only retrace here and then hold lower highs and continue its way down and really start to accelerate. Instead, it's had a good solid bounce back. So the market's put all the way back sort of that $11 mark, but then it's come down and it's taken out the lows again, but really not much at all. It's only, what was that, 25 to 30 cents or so before it started reacting higher. So you can see the buyers, they're stepping in, it's just washing out the lows, they're stepping in just after on a bit of a break of the lows, it's washed out and they start to buy it back up again. So if this is the case, it's showing that the selling pressure's running out of steam, longer term anyway, is running out of steam. So this could be the start of a new solid leg higher. We could get up to 11. We might find some resistance below. It might be the same sort of scenario. You could build a lower high. So you've got to have all these sort of factors in play. Just remembering from the weekly where it could be going to. I mean, that weekly trend is still holding at 11. That's your key anchor level for the move down. This might be that retracement up, and then we start to capitulate again. I'll just draw that up. What I mean is that you can see the difference. This move up was a lot steeper. So as a stronger reaction up, then we got that little retracement, and then we got these reactions back up again. This reaction has been a bit more controlled on the weekly anyway. So it could be that it's a bit more controlled because there's maybe further selling to come in, or it's just turning around and heading higher. Either way, it doesn't matter too much as long as you've sort of got that weekly, some weekly levels on your radar of where potentially the market could be heading to. At the moment, I would suggest that on the weekly, it's up towards that $11 mark, which would suggest you've got heaps of room to move. Even if you had 865, so you got in here, you could tighten up your risk. I mean, this is your key level. What's that level there? That low 857. If you put it at 850, for example, and you get washed out there, you know potentially that daily trend has changed, and it's heading south, and you're probably coming off a lower high as well. But you know this sort of move, if it comes down and stops you out there at around 850, something's wrong. The trend has changed. This little leg up is running out of steam. We might be coming back down to build a major high low on a weekly down at $8. You don't know what's going to happen from there. Rather be out reassessing it than holding a long position. That could be the case, or so that way, or you can just tighten it up. You can tighten up to 870 because I suggest if that goes to the next level is probably going to be at least taking out that 860, 850 zone. And you're not giving up too much if you're wrong, with the upside of potentially up to towards that $11 mark. So I reckon it's a good handy little trade, and that probably comes off the basis on that weekly that we haven't taken out these lows too much, so the selling pressure is starting to run out of steam. It doesn't mean it's finished on Cope. It could easily just keep grinding higher and then spend a long time around $5 even. You don't know. You don't want to be in it holding something for no reason if it's headed south. So yeah, it's I love the daily. It's just the weekly I've got in the back of my mind. What was the other one you were looking at? HSO. Look at NWL as well. Yeah, HSO. I just talking this one today with Davin. Again, that your weekly chart is not seriously strong. It's just the gap up today is the only thing that sort of saved that weekly chart. If you take that out of the equation, that move up, that gap up on, was it takeover? Conditional acquisition proposal, so takeover offer. If you take that out of the equation, you're still down at 205. So you're somewhere down here. Up until then, the market was in a downtrend on the weekly basis. You've only got this minor contraction. It could have headed south from there. That's sort of come out of again, that's all based off the weekly. You might find the daily itself, the market's headed higher. You've got 1, 2 before you had a deep correction. We'll draw that up as well. It's not what I wanted there. All right. So you had the market push up, a good pullback, another push up, and you sort of got a zone up towards that. I think it was around 220. Not really. It's probably further up around that 240, 50 mark. So we're coming in there now. Here we go. And then you've had a deep sell-off, and it did spike through that low, but you can see that's a line of sand. That's more of a washout. It's gapped down, washed it out, bounced back off, built a lower high, which is okay. But they come back down and retest, so that's not looking too bad. Okay, across the tops there, that little pullback, that would have been ideal. Buying maybe just on that break of 195, that would have been great. That would have been preemptive of this high-low holding, and then you've got your level if you can draw it from that low to high. That's only going to take us pretty much up to 210, but that was risk reward if you traded it, say, through 195, for example. Your risk is just down here. I'll draw that in a different color. just so you can see the entries. So your entry could have been around that 195 mark, just on that bounce, and that's coming off your higher low in here, off a key support zone. Your risk can be here, so 2 to 1. You probably got 1 to 1, over 1 to 1 initially before we gapped up, but then that would have been awesome. Would have been awesome to get in there and see it gap up today and just have a bit of a giggle, because it's gone straight through that resistance zone at 225. That's awesome, Paul. Where'd you get in on that one then? Oh, just wait. There's probably, so that's sort of the only real entry that I can see. But then if I was going to take that, I would have been projecting it potentially just to move to those highs and have to reassess it. If it got through the highs, fine. I'll just follow it up on the daily chart with your higher lows. And then your next level would have been, say, 225, and then further up to around 240 is a major level. So it's still just below that major level now. And that's from your weekly basis, from your weekly chart, sorry. 204. So that was around here, wasn't it? Wasn't that green candle? 18, so it wasn't that green candle. Just a break through that $2 level. So that's nice. It started taking a bit of heat here. But still, stop would have been, I'm assuming, it's just below, around that, say, 185, below that high low there. And then just looking to trail. So nice. So that was an entry for Paul just above that $2 level. So a bit more risk on that. But then it was more confirmed. You got better confirmation with the break up through that high that you are coming out of this contraction. The contraction. So yeah, that's either entry. You're still giggling to yourself, though, aren't you? Doing well. So what's your plan of attack for this? Are you taking some off now, or are you just going to hold it for the long term? I mean, with that sort of takeover offer, then you're going to have to see that through. Might be worthwhile taking half off that position, because what's the price they got on that anyway? It's going to be somewhere around where it is now, isn't it? Initial shares. Is that right? Am I saying the right thing? 236. So where are we? Probably about there now, aren't we? Well, not a bad idea, maybe, to just take some out at this level, because it could just be banging around. There's a counter offer, there's another offer, blah blah, could bang around, go sideways from here. And if things start looking a bit sticky, like it's going to fall apart, that market will come down, start to sell off again, and probably could come all the way back down to 210. Who knows? So I think it's a bit of a gift. It would have been nice. So yeah, luck with the takeover today. Yeah. Oh, look, we had the same thing. I think it was an APT. I mean, it's like no one's going to know, even if you're a fundamental trader, you're not going to know that's going to happen. Who's to know that unless you've got inside info? And then it's it's kind of against the law if you're buying it on the insider knowledge. But either way, gift is a gift. It's fantastic, and you're still reading the structure, as in buyers are stepping in. So if you're buying it for a certain reason, you don't know why people are buying it. You don't care, but you do know that it's starting to show signs of moving higher. So you bought it. You don't know where it's going to. So obviously your first level could have been up towards 210. It didn't get there before it's gapped up today, but that's just the beauty of trading, isn't it? All right, what else have we got on that? NWL. Nice. What have I missed that one? So you can see I mean, longer term, the way I'm viewing this, because it hasn't got much data, is it? When did it float? Looks like it was on the 20th of November. Is that right? 20th of November. Yep. What's the news? What do they do? Simulation, super and super platform products. Innovative portfolio administration. There's a few companies that are doing around. Same sort of thing. We've got Premium that I've been watching. Like Premium, they're a similar thing. We've got Hub, which we've gone long and recently gone short and stopped out of that. But that structure's looking quite good. Similar type of business. Um, Net wealth. What are they turning over? So they've got more volume by the looks of it at the moment. So yeah, that's longer term, I think you could see we're going to get, personally, I'll be struggling to buy it right here. Beautiful little break here, and if you can ride that up and you know where your risk is going to be, it's not much risk for a ride up into that resistance zone of just around 740. And longer term, it's more of a rangy sort of a trade to me. It could get up to here, 740, then pull back. I want to see, and you can see the bigger moves. I'll draw back to blue. Color scheme is important for me. So you got that big move up, another big move up. That wasn't so big, washed out before we got this big move up. Then essentially you've got that right back down to that support zone. A high low compared to this 570 level, a higher low. And then this is all part of that single move up. And if it is, and we do pierce there through those highs, I would more expect, so we're coming off that range, I would more expect a higher low to build. So you obviously can be looking down to your daily charts, whether this moves down, that move down from here to here before we start heading higher is in 2 moves. That would be ideal, and then start to look for your higher low. And that's a major higher low, potentially somewhere around 670, 660, who knows. Just the way it is at the moment, it's gone from a bid zone to a potential offer zone because you've got a double top up here. It's getting up into that. I assume it could just get up there and find some more reaction lower and sell off again. And then you've just got to reassess it. I mean, it could come back, just go bang, bang, bang between bid and offer for a while yet. Top 100 now. They look good. I like that little setup. It would have been nice. And you can see here, stochastics are getting overcooked and we're getting up the resistance. So there's a few factors to me. It looks like it's going to find some sort of resistance up there, a bit of a reaction lower off there. And whether we get that, a good move down, and you can see the selling pressure go from overbought to oversold, but we only fall short. Well, I just say potentially through here. It's found that sort of zone before, washed it out before we reacted back up. I mean, it did take it out, but you can see it's pushed down and reacted back up. It's all sort of through that 660 zone. Whether we get a bit of a pullback to 660 and then get this move up, but it's you break it down to a lower time frame, it could be made up in a couple of moves. If it's not just savage like that, straight down to that, I'd be more inclined to believe that's a strong buy than just a move straight down because it could easily get build lower high, bang, straight back down and start range trading again. Does that make sense, guys? Back at support. Are you talking down here at $6? Helen? That would have been a tough one to buy it off that support. Well, for me anyway, I find that sort of buying it off those support zones a bit tougher because I'm inclined to always look for a high low. Well, then you've probably just about got one, haven't you? We draw this up again. I'll just go. There is a really good trade before that, wasn't there? So if you take that, I really like that. If you can see this move down here, I like this type of stuff. You know, it's moved down. You've had 1, 2, 3 moves down. It's double bottom essentially here. Then you've popped up. You can see that pop up, pull back, double bottom, then starting to lift, higher low here. That would have been a nice little entry through there. You've got sort of minimal risk, and then your first initial target's going to be up towards the highs again. It did just fall short a bit. Whatever you did with exit, what's your exit strategy on that? Who knows? But I would have been happy just to take some off. It started failing, maybe take a partial up there and let it go. Essentially, probably would have been stopped out way back down here. But that's a nice setup. For me, it would have been a bit tougher to buy it just on here, under both MOs as well. Yeah, that's a good move down, and that it's sort of reverse of what we're seeing now. It was stretched on the downside. It was into a support zone, potential support zone. I like this entry a bit better. It's a bit cleaner for me. I'm not much of a rangy person, but that, if that's the low you're talking about, you've had 1, 2, 3. So you've got that sort of 2 legs down, stretched down here. It's found a support zone through here. Could have been an entry just, I know it's probably not a clean enough entry for me, but that's pretty much legit. Got a down day after a green candle. It's reacted off there, and then it's turned around the next day was straight back up again. So that's a legitimate entry. You've got your risk just below 610. Bang, up she goes, and you ride it up to your targets. At least is going to be 740. So that's nice. And like you said, you get the compression in the MAs, they haven't crossed and they expand back up again. So yeah, actually, I like these stocks. There was another one, PPS. I think that's it. I can't think of the other one that's in that same boat, or in that same sector. Yeah, no, that's true. That's why I find these tougher. I like this style where you can see higher lows are starting to creep in. The lower highs are still in force until you get. So this is for me showing, especially after the washout of that previous low with these two candles and the minor double bottom, and then you get the high low in here. It's starting to show the pressure from selling to buying. It's starting to shift. Buyers are happy to step in, and then you just really, I'll be looking for the entry, and you can see the compression in those MAs. They didn't touch even. They were still facing up, and then you're looking for that acceleration back up. Here's more just taking a punt and sitting on the bid. No one's right. It could have just pierced there and gone straight down again. You don't have any confirmation apart from this minor entry just in here that you are going to be on the right side of the market. I mean, this could have easily, just trying to think, find an example. It's a bit tougher in shares. This could have easily just contracted. You've got a key lower high up at 710. This could have just contracted with this red candle. If you entered here, like we said, through here, it could have just fallen short the next day. It could have been gapped up on the open and then boom, straight back down again. And then you might just get stopped out if you haven't had a chance to shift it, move your stop up. You could have just been stopped out on that one there. And that could have been a major lower high, taking us straight down through support. Who knows? I just think this is a better sign of buying strength coming in or coming back into the market. You can see this is one I've got on Byron Energy. It's a very small one. It's not going to be everyone's cup of tea, but it is looking, and it's only a 40-cent stock, you can see, and there's enough stock on there as well uh, to get set. It depends if you're pumping through 100 grand's worth, you probably have to build a position. But there's enough shares on issue just there. You can see that you can get 10 grand out. I'd say fairly easy. SDF, all right, take a look at that. But I don't mind this one. You can see that trend is definitely up. You've had that little spike higher, and it's always good to see a spike higher and then the pullback. It's only roughly 50% of that move up. Just drill in on that. So that move back is only 50%. So it's probably today that's led me to look at that. I'm just wondering whether we're going to get that break. Markets one, two moves down. You've still got a major high low. This is your first sort of zone where and the 37.5. I know it's not much, but in context to what the price action's been doing, I would rather that held up, not pushed down as much, but held up a bit. Well, draw that a bit better. Held up a bit better and sort of had a few days, but holding. And then, well, take one step back, then going for your buy entry through potentially the highs at 41. But we'll see. It could still play out all right. It might just test what we've got. That's our support down through here around 36. That's our 41 zone. It may have pushed up through there. It may just push back down, test, well, it just about has that support zone. And then you might see it contract a bit. As long as it starts to hold a few high lows, even if it's on a day, and then you've got your entry. I think that's going to be a solid entry. But you can see this green candle here and this price action in the next couple of days, it's coming out of contraction. But the next step from analyzing this is, okay, we're coming out of contraction, but are we heading higher? Or we're just going to go sideways and consolidate. And then we may have another deeper correction lower as the market sell off, oil, whatever it is, head lower. So you want to make sure that you're on the right side of the market as it's lifting. And right now, like I said, today that candle's not too convincing for me. But the longer term trend is up, and it's in a good zone just here. It's all about the setup for me here. If this fails, comes down through 30, was it 36? If it pushes down through 36, then I have to just reassess it and see what's going on. But at the moment, it's not looking too bad. Oh, okay. Flicking over the weekly, you can see this move up hasn't really had a decent pullback at all. It's just turned on a dime. You had a big selling coming in here, sideways for a few years, and it's just lifting. I want to see it have a decent enough pullback, and it's gone from overbought. No, that's not too bad. I mean, the daily's the trade we're looking at. All right, SDF. What are you looking at this one, Helen? It's in the same sort of, I don't like. This is what I'm not too keen on. What are you thinking, long or short, Helen? just glancing at the last few days, this price action here, I'm sort of, I'm borderline short. That's the weekly chart anyway. And I'll show you why. Without looking at the daily, I'm just trying to get the biggest perspective of it. It was consolidating through here. Then we had that first leg up. You probably got a minor high low around that 140 mark. Pull back, push up, pull back. Only just got through the highs. It pretty much gapped up, washed out that high, and then we've got this move lower. All right, so just to take out that support zone. So for me, we've reacted back up there, then we come back down. So if we don't get up through this high, we could contract a bit more. For me, at the moment, it could be just an each way bet. You can see what I've just drawn, that compression. We don't quite know just yet. And it all comes back to breaking this high low for me. So at that stage of this move up, that was your anchor. If it was a strong market, for me, it should have kept going, up through 310, and then you project this leg up. You've got your target where you could be heading to. The fact that it's come back down and taken out that anchor level, we could get some more selling because this is your first leg down, and we haven't really built that secondary leg down. It's all if and but on the weekly, we could have some pressure come back into the market, and you can get that secondary leg down to say 220, and then start building, and start holding that level. It could even just pull up short around 235 and retest that low, and then start building. Come back down. We've got this sort of market here. Come back down, retest that support, and then start holding high lows or contraction. Then boom, up we go from there. Or we just don't. We just break up through here and go, from this level straight up. I'm a bit inclined. I don't feel like that's gonna. It looks to me like it's gonna happen, but you've also got the pressure. It's just in a contraction phase, the way I'm viewing it. Back down to the daily, probably looking at it on the flip side. Window shopping. Yeah, no, I know what you do. You put up some nice charts. So you've got that zone, you've got that little washout of the previous high that we mentioned on the weekly. That was your washout through here, but you can see how it rejected that washout. So that's actually not a bad sign for the bulls. So it's probably, look, all right, I'll take all that back. It's a bit clearer on the daily. That's why it's good just to flick around between the daily and the weekly. So for me, everything I just mentioned there, we could be just breaking up and out. So I'd be, from here, I'd probably be inclined to see, and essentially that's a double bottom. You've got this washout of the lows, this previous low, with this move down here, big washout rejected, seriously rejected, bang straight back up. You've got a little minor high low here. We've retraced all the way back up. We've come back all the way back down. We couldn't take out the low around 235. And so for me, it's important if you pull up short, like we have around 215, and we've gone straight back up, and we're just breaking out of that contraction. Only as of today, I wouldn't buy it just here because I wouldn't want to put my risk just here. Again, I'm looking at the bigger picture. This move down, this move up, this move down, and this move up. So what do you got there? Bang, bang, high, low, and we're just starting to come out there. I would like to see potentially a bit more contraction, and that way I can just minimize my risk on the daily basis and potentially buy something like that off a couple of extra high lows. The market's contracted. You can move your risk out too if this does become a high. But I just want to see this because I think this has got the potential. It could easily contract quite a bit down to 250. You get stopped out if you bought it and had your risk at 255. But yeah, it's looking at that weekly one for the cards. I wanted to see it do a bit more work though, from my perspective. But we'll see. CW Cleanway. Again, there's a lot of stocks around at the moment. Oh, that's kicked on, isn't it? Yeah. I agree with you, Alan. Overthinking it when there's too many ifs and buts on that for me. I'd rather just step aside, pick something that's a bit cleaner. Cleanway, that's had a serious move up. Okay, just trying to get a bearings on this one. It's overextended where we are. We've just taken out this high, say just by $1.60. So we'd never buy it up here in an overextended market. I mean, if I was going to buy it right here, my risk has to be right down at 137. Too much risk for me to allocate to any one trade on that. I could see this was a nice little, potentially, this is a very aggressive entry, the way I view it, a very aggressive entry. I just want to mark up, I just want to explain it to you a bit better. There's a few things on Cleanway that I'm looking at. So it's had a big, big move up, and it really hasn't looked back, higher high, higher low, higher high, bang, all the way up to currently where we are. We've had that correction there, and then it rejected that. So I would suggest that's sort of your level around 140, 138, say. It's just popped its head through there, but it's essentially held up. If if you see sort of moves like this, okay, it pushes down through a minor level, that's your inside, your higher low, you say, because it's led to a new high through that high. So that is a key level. It's not a major level, but it's just a key level of that trend continuing up. We've washed that out, but you can see the way it rejected that was quite strong. And then we've pulled back. We've had a couple of moves down. We've fallen short, only a few cents probably. This is on the weekly, don't forget. We'll go into the daily in a second. So if you are watching this, it's a very aggressive entry. So just keep bear in mind that we're looking for this at the stage, that high low around 140 to hold up because of this washout. It's more of a washout than a key change of direction because of the way it rejected. So going to that daily chart, and I think this will mark that up. So that's your level there. So we'll say it's around 138. That's your washout here on your weekly. That's your rejection. So it did it savagely, and then we've got up towards, so that's where at that stage I'll be marking it up. But you can see then you've got this move down and you get, again, rejection. You've got a lower high and you come back down. It's only ever so slightly. It's a higher low. So if you're looking at that, you're going, oh, hang on a second. I've got a high low. So I've got the contraction I like. This is potentially resuming the trend. So you can sort of discount this as a break of trend or a change in trend. It's more of just a retest. And I would throw them both together, a retest or a little washout, and coupled with rejection like that move up, I'd suggest that's just retesting that anchor level. It's cleaned out a few traders. It might have some buyers that bought it up here. Go, I'm going to place my stop low there. Clean them out. Bang, rejected straight back up again. So for me, that's more of a double test. That trend is still holding on your daily basis and your weekly. And then you're getting this high low here, higher low, but you can see this contraction. And I think there would have been a nice little entry. I've drawn lines everywhere. Sorry, I'll draw it up a bit clearer. For me, my entry would have been just in here if I was quick enough, if I was looking at that stage. And that probably comes down to really, you've got your entry through here. You know where your risk is going to be, just below, say, 142. So you've got a chance to minimize your risk. It looks like it's breaking out of this contraction lower. You're breaking up and out. So from there, you don't know where it's going to go. Your first, obviously, target's up here, 2-to-1 trade there. Your next target's, it hasn't hit it yet, but up towards 147, 67.5. But don't forget, you got the trend on the daily and the weekly is both up. All right, so you could have quite a bit of, we could easily get up through here and just continue that weekly trend. But on the flip side of that, don't forget the weekly trend it really hasn't had a decent pullback. So either way, I mean, you'd be sitting on a 2-to-1 here, potentially 3-to-1 right now, which is great. You're not risking too much, and you've got the potential to extend up into 167. It is extended at the moment where we are, so that's going to run out of steam sooner or later. And then from there, if we do pull back, when it does have a pullback, where's it going to pull back to? What's going to happen? So I'd be on this one, I'd be inclined to just take a partial if I had that entry there. If now, because I'm not in, I wouldn't go near it just yet. Does that make sense, guys? Just how we built that entry setup there. It is, like I said, that's not my typical one, but there's still foundation for that. You can see that contraction in here, and then buying it on that break, you don't know where it's going to go. So you've got a few levels that you're running into. You could run into a few issues with, but hey, look, that's the nature of trading. That's a legitimate setup there, going from contraction into expansion, which we always talk about. But I do, and for me, it's always about minimizing risk. I don't like to take it, I wouldn't like to take it for a breakthrough that high, because for me, I'd have to have my risk right down at 137. I'm not prepared to take that much risk. So right now, I wouldn't enter it. But that was, way back here. If you were looking at it back then, it was a nice little entry, probably worth taking too. Again, you just got to bear in mind what the weekly is doing, just so you know what your risk is, because this hasn't changed. This move up hasn't had any sort of decent correction, so we could run up and build a double top, and then if we get that double top and a rejection off that double top, off these highs, and then we hold a lower high, I'm inclined to believe that's going to break 135, and then from there you just have to sit and wait to see where it's going. All right, that's that one. OEL. Janice. Let's take a look at that one, see what that's doing. Look, that's actually not too bad. What's that? Auto Energy. Thanks for that. I'm going to keep that on my radar now. That's your weekly. So let's draw out the weekly. So what we've got here, so we're breaking through the highs. Is that where it? No, it's got heaps of data. All right. You see on the monthly, the market's headed up. A big sell-off. That was a GFC, big sell-off. So you could probably discount that. It's had to rebuild quite a bit. It's tried to go back up and then kept coming down. And then you got this little pop-up here in relation to this high. It couldn't get there and you got another sell-off. So you've made a lower low. All right. So in regards to the monthly, if you're a pure technical basis, this is a contraction of this move down. All right, so we're just contracting that move down, but because it's the monthly, you've got so much room to move. So you can sort of forget about it, but just remember what we've seen. And we've done it before. We've sort of gone up and had a good sell-off. So it's just to bear in mind if we do get caught. On the weekly, looking at the weekly, I think it looks quite nice. And you've got, that's your low there. We built a good high low, and you can see the way, okay, this is your move down. We bounced, had a little pullback. We've had another bounce up here. We've come all the way back down, but you can see the steepness of that, the gradient of this move down compared to this move down. So that just, it's that initial heads up that, okay, the selling's coming in. It is pushing it down off a lower high, potentially around that 6.5 cents. But it's more control, which suggests that buyers are stepping in. Buyers are stepping in and soaking up that selling pressure. And then they build a higher low around 2.5 cents, and we've got that move back up. Right, so that's all positive. We're starting to chop now around that high there, that lower high. We're getting a bit choppy, so this is all on your weekly. So it's good signs. The more, for me, the way I read it, the more stochastics go from overbought to oversold, but we hold around the level, that's a good sign that buyers are stepping in and soaking up any sort of selling pressure that's coming into the market. And you can see that by, we've got a reaction lower, it's come straight back up. A reaction lower, it's come straight back up. So for me, that's not too bad at all. And you're starting to form a bit of a wedge pattern as buyers are stepping in. There's been some good pressure on the weekly anyway, some good selling pressure, but it is getting soaked up. So that's quite nice. All right, we just want to see, ideally, I'd like to see it sort of chop around a bit if you drop it down to the daily. It's just sort of this day, this is a bit of a spanner in the works. It's based around news, what looks at platform performance. All right, so but either way, that's a positive sign. So we've got that there. Right, on the daily basis, remembering that's our 6 cent level. We're sort of oscillating around there. We're holding some higher lows. So again, I'm concerned that could just, if we bought it up here, for instance, or bought it on a break of that high, I think there's too much risk for me to take. So that's why I would like to see that the fact that it's come up off that resistance, and we were sort of doing this type of price action. We'll just draw that backwards. So that's not too bad. I wouldn't mind seeing a pop up here saying, okay, the market's happy to head higher and up correction. And again, a higher low to work off. And that just, two reasons I always like to look at the high low. It's evidence that buyers are stepping in at higher prices. They're happy to pay up a bit more for it. So it looks like there's the consensus view is that the market's going higher, and you've just broken through those highs, and you're not risking too much. You can minimize your risk when you get that contraction. So looking for entries like that, I love them. Right, does that make sense there, Janice? All right, I'll probably have to call it a day there, guys. I didn't realize I've just been jabbering on too much. If that makes sense, that yeah, this one is one to keep on the radar for me, just the way we are. And it's this selling here that I don't like that too much. We've come up here, we've had a good correction. It was quite savage. Selling's only taken us straight up to those highs again before we get another reaction lower, but buyers are stepping in. So you can see the sort of price action building. And remembering this is all near a key resistance zone oscillating around $6 on the weekly. If we just step back a touch, so it's good. And that the key structure on the weekly is actually quite good. If we can keep chopping around here a bit, what that's going to do, the more time it holds around these levels and you get these minor high lows stepping in, I think the bigger the chance that's going to really continue on, or the higher the chance it's going to continue on anyway. That's a nice one. All right. Um, all right, we'll finish up there, guys. Thanks very much for joining me. Anyone that's new, if you've got any questions, just shoot through an email, support@tradesetup.com.au, and I'll get back to you there. Keep them coming, Paul. That's great. I enjoy seeing what you're doing there. It's good to see you smashing it a bit too. Kicking my butt. All right, thanks for joining me, guys. I think we've gone over everything. We'll be back in on Monday. Enjoy your weekend, and I'll speak to you then. Cheers, guys. Bye.